Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty declined for the fifth straight day. A sharp sell-off in late trade takes the Nifty below 25,000. Foreign investors have pulled out more than $21 billion from India since the start of 2025. The rupee remains largely steady against the dollar, even as it remains near record lows. The Indian currency has weakened by more than 3% in the first 9 months of 2025. Gold prices remain steady near record highs. Silver trades at 14-year high. Copper prices surging to 15-month highs after an accident at the world's second-largest copper mine in Indonesia. Shares of Tata Motors tumble as Jaguar and Land Rover stares at fresh trouble. Financial Times reports JLR faces a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Commerce Minister PiyushGoyal says India will buy more energy products from the US as trade talks continue. Goyal also meets the president of the World Bank and top US business leaders in New York. President Trump is set to host Pakistan's Prime Minister Shehbaz Sharif and Army Chief Asif Munir at the White House later today. The government will provide a subsidy of up to 25% to incentivize the cost of acquiring a ship. The Union Secretary of Ports and Shipping says the move is aimed at bridging the cost after the cabinet clears a 70,000 crore rupee package to bolster maritime development. The Karnataka government issues new draft rules to auction defunct liquor licenses. The move is likely to raise over 500 crore rupees in the first round, where 579 licenses are set to be auctioned. A majority of India Inc. plans to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council are upbeat on capacity expansion in the near term. Well, let's head straight to the day's market action. The Wall Street declining for the fifth day, ending at the day's low point. The Sensex and the Nifty saw cuts of over 0.5% today. The Nifty ending below 24,900. The Nifty Auto Index lost almost 1%. IT down 1% as well. Nifty Metal closing just about in positive territory. So the markets dragged lower by auto and IT stocks. Also, for the fifth day in a row, we've seen the IT index closing in the red, with TCS hitting a 52-week low. Except for metals and defense stocks, all sectoral indices closing in the red today. Now, Indian markets have seen foreign investors pull out over $21 billion in the first 9 months of this year. The markets are underperforming most of the global players. Nimesh is here with a snapshot of how India fares compared to the rest of the world and how other asset classes stack up against stocks. Nimesh.
Well, Indian markets have relatively underperformed not only the global equity markets but also the commodities market since the beginning of the year. Just look at the data. Indian markets are up just 1-2% in dollar terms since the beginning of the year. Compare this to the US markets. The US markets on an average are up between 10 to 15%. So that's a big underperformance there. The bigger underperformance comes with the Asian markets. All the Asian markets are up between 15 to 35% since the beginning of the year in dollar terms. So big underperformance to Asian markets as well. Even if you compare the European markets, India is relatively underperformed. Most of the European markets are up between 18 to 30% since the beginning of the year. So that's the equity underperformance. Even if you look at the commodities market, India is relatively underperformed. Gold is up 42.5% since the beginning of the year in dollar terms. The even bigger surprise is in silver. The silver is up 52% since the beginning of the year in dollar terms, and even copper is up 18%. That potentially explains that the FIIs are big sellers and it's not the preferred market so far as far as the FIIs are concerned. The FIIs have net sold nearly $21.5 billion since the beginning of the year. It's the highest among the EMs market. The next big market is the Korean market, where they've sold nearly $20 billion. So India is relatively underperformed not only the global equities but the commodities as well since the beginning of the year.
All right, Nimesh, many thanks for joining us. The Indian rupee, meanwhile, recovered from an all-time low against the dollar. This as the American currency weakened in overseas markets. Dealers tell CNBCTV18 the RBI intervention yesterday and the day before supported the rupee. So that's the rupee for you. And gold prices holding steady near record highs as investors await key U.S. economic data for further insights into the Federal Reserve's monetary policy. A slightly weaker dollar also lent more support to the bullion. Silver prices, meanwhile, holding ground. 14-year high for silver as traders put their bets on the precious metal. This after the Fed said that further rate reductions are likely to be needed. Meanwhile, copper prices at a 2-month high, while futures are trading at a 15-month high. The metal prices surged 4% overnight, this after an accident at the world's second-largest copper mine in Indonesia, that bringing in fears over supply, and that has taken prices higher. But shares of Tata Motors tumbling in trade as Jaguar and Land Rover stares at fresh trouble. The Financial Times reported that JLR is facing a £2 billion hit as it was not insured against cyber attacks. The company has shut down its factories since the start of this month and is hoping for a phased restart from October. Sudarshan joins us now to explain what exactly is going on at JLR and why the troubles continue. Sud.
So we had earlier reported about the impact that company might face due to delay in the production. But now, as per the several reports, and Financial Times reported majorly today early in the morning that because of the company not having insurance coverage ahead of cyber attack, it might have an impact of £2 billion. And that is in addition to the daily impact that company has been facing of £5 million because of production delay. So this is the main reason over the last two sessions you have seen a big fall in the stock in the last 2 days. It's down almost 6 to 7%. Now, if you take a look at the timeline of this cyber attack and post that company's comments. So, cyber attack happened on 31st of August. First comment company made on September 2nd saying that it's looking into the issue and will be restarting the production very soon. And after that, second statement came on September 10 talking about that some data might be impacted because of that. And after the latest statement came on September 23 in which company has said that it has extended the production pause till October 1. And on the resumption of production, it has said that it will be resuming in a phased manner. Now, if you do a simple calculation, so £2 billion impact because of no insurance coverage, £5 million daily impact because of the delay in production. So it's almost, if you do the calculation, it would be much higher than the profit after tax that company reported for FY25, which was £1.8 billion. So that would be more than that. Now, why this is important for Tata Motors? Because JLR forms nearly 70% of total consolidated revenue for Tata Motors. Now, apart from the cyber impact, there was another news came that is attributing to Guardian. It is said UK government is looking to resolving this issue. How? It's considering several options. One of the options is that UK government will buy parts from suppliers to JLR, and once JLR resumes the production, it will supply it back to JLR. In that way, it wants to help the government. Now, JLR CEO has replied to UK Parliament Committee in which he has said that Tata Group is in close touch with JLR to offer advice and support, and JLR has already paid £5 billion and is in good position to secure any additional liquidity if it is required. On cyber attack impact, he has said it's premature to comment anything on that. We'll have to see how exactly it pans out. But as far as stock is concerned, it remains under pressure.
So many thanks for joining us. Trouble there for Jaguar Land Rover. Commerce Minister PiyushGoyal has said that India will buy more energy products from the US. Minister Goyal is on his first US visit since the 50% tariffs were imposed on India by the Trump administration. The Commerce Minister met Indian origin executives including World Bank President Ajay Banga, IBM CEO Arvind Krishna and FedEx CEO Raj Subramaniam in New York. Goyal also met Carlyle CEO Harvey Schwartz, Warburg Pincus Chairman Chip Kay, Blackstone's Chairman Stephen Schwarzman, among others. Pakistan's Prime Minister Shehbaz Sharif is expected to travel from New York to Washington to meet President Trump today. This will be their first meeting at the White House since 2019. Just 2 days ago, President Trump, in his UN General Assembly speech, once again claimed credit for the ceasefire between India and Pakistan. Pakistan has backed Trump for a Nobel Prize, even as India has refuted claims of any third-party involvement in the ceasefire. Earlier this year, Trump also hosted Pakistan's Army Chief Field Marshal Asif Munir at the White House. We told you first, and it is now official, the Defence Ministry has signed contracts with HAL worth over 62,000 crore rupees. The deal will entail the procurement of 97 light combat fighter jets. Parikshit is standing by now with more. Parikshit, take us through this big contract.
Well, very symbolic. This comes just a day before the Indian Air Force retires its MiG-21 fleet, the aging fleet. And now this contract for 97 LCA Mark 1A fighter jets has been signed with HAL. Now, this had been given government approval on August 19. A commercial contract has now been inked. This is a contract worth around 62,370 crore rupees. The deliveries would commence in 2027-2028 and would be completed over a period of 6 years. Now, we have seen how deliveries of the previous Tejas fighters has been delayed. The order for 83 Tejas fighters, which had been placed in 2021 February has been pending delays, and now we believe that the first 2 fighter jets from the 2021 order will be delivered in the month of October. But the new order for the 97 fighters has significant improvements. For example, it has 64% indigenous content. It has 67 additional items incorporated over and above the previous LCA Mark 1A contract, which was signed in January 21. The integration of advanced indigenously developed systems such as the Uttam Active Electronic Scanned Array Radar, Swayam Raksha Kavach and Control Surface Actuators will all increase the self-reliance and Atmanirbhar component. And we will need all this indigenous technology in future conflicts as well. The project, we're told by the Ministry of Defence, is going to be supported by nearly 105 Indian companies. And this is in the Buy Indian category. It will generate close to 11,750 direct and indirect jobs. The ability of HAL will also, to deliver these fighter jets will also depend on how fast and how soon the GE engine maker in the US delivers on its obligations to HAL. There have been delays in the past, and the government has been in talks with the US to expedite deliveries. So let's hope that everything is on track and the delivery of these fighter jets also takes place on time.
All right, Parikshit, many thanks for joining us. And speaking of defence, Prime Minister Modi says India will commence the production of the AK-203 rifles in collaboration with Russia. Speaking at the UP International Trade Show, the Prime Minister said that India's defence forces want to decrease their dependency on foreign countries. A factory will be set up in UP to make the AK-203 rifles.
भारत में ही हम एक वाइब्रेंट डिफेंस सेक्टर डेवलप कर रहे हैं। पुर्जे पर मेड इन इंडिया की छाप हो, हम ऐसा इकोसिस्टम बना रहे हैं और यूपी इसमें भी बड़ी भूमिका निभा रहा है। बहुत जल्द रूस के सहयोग से बनी फैक्ट्री से AK-203 राइफल का उत्पादन शुरू होने जा रहा है।
Well, a majority of India Inc. is planned to add capacity through fresh investments in the next 1 year. Around 80 CEOs polled at the CII National Council meeting are upbeat on capacity expansion in the near term. Take a look.
You know, on the back of the measures already undertaken, is there confidence in industry to start the capex cycle? Are you going to be investing in adding fresh capacity, in setting up new capacity in the next 12 months? Those of you who intend to spend money in adding capacity, if you could raise your hands in the next 12 months. Okay, so quite a few. Let me hop across to Sunita Reddy. Sunita, of course, you've got a big expansion plan as far as Apollo hospitals are concerned, but that's a sector that is, of course, poised for growth. So you feel confident of being able to spend over the next 12 to 18 months?
I'm very confident because I believe the structural demand is there, intact in the market.
What is the quantum that we can expect you to spend in the next 12 months?
12 months, I think you should look at it 36 months for a long term.
Okay, 36 months.
6,000 crores.
6,000 crores in the next 36 months for the Apollo Hospitals Group. Madhav, what would your capex number be for the next 12, 36 months? You can decide which number you want to go with.
It's about 4,500 crores for over the next 24 months.
Okay, 4,500 crores over the next 24 months. Deepak Shetty, let me come to you. The JCB has taken on a whole new meaning in this country, but nevertheless, let me ask you, sir, what is the plan as far as the capital goods sector is concerned? Infrastructure front loading, we've seen that across both the central government as well as states. What are you picking up in terms of demand?
The demand comes from two sectors. One, the central government projects, particularly driven by NHAI, but a big role is played also by the state government. So we have seen some great progress on the central government side, new projects being announced last few days by the Honorable Roads and Transport Minister. Where we are struggling a bit are the investments by the state government.
Okay.
And that is something which I'm sure with the improvement thanks to GST2, more collections, etc., particularly the rejuvenation of the rural economy, that will start improving. So that is something that we are hoping for.
So, in light of what you're seeing at this point in time, capex plans for you?
Yeah, absolutely. At JCB, we have continued to invest. Even during COVID times, we built a new factory. And we are not only looking at the business in India, we are exporting to 135 countries, so we are looking at the global market. And we'll continue to invest as we are doing both, not only in capacity, capability, but also in R&D.
But do you feel the need to add capacity at this point?
Probably in the next 36 months' time, not immediately.
Well, that's the mood of India Inc. as far as capex plans are concerned over the next 12 to 36 months. We'll head into a break, but up next, the Karnataka government has issued a new draft rules to auction defunct liquor licenses. That and more when we get back. Well, the Karnataka government has drafted new rules to auction defunct liquor licenses. Nearly 579 licenses will be auctioned via an e-auction system, with 2 new license categories being created as per reports. The state government expects to rake in close to 500 crore rupees through the auction. Shilpa has more on what is being planned. Shilpa.
Well, you're right. The Karnataka state government has decided that defunct liquor licenses will no longer be renewed, but instead they'll be auctioned online. In all, about 579 licenses that lapsed or were never renewed will go under the hammer, including retail liquor shops and bar licenses. Now, to facilitate this, the government has created 2 new categories: CL2A, which would be for retail shops, and CL9A, which would be for bars and restaurants. Now, licenses will be auctioned online and awarded to the highest bidder. Now, this was first announced during the FY26 budget by the Chief Minister, and the move is expected to rake in nearly 500 crore rupees for the state coffers. It's a time where the government is looking to shore up additional revenue and even meet its 40,000 crore target of excise revenue collection this fiscal. Now, Karnataka's freeze on new CL2 or CL9 licenses since 1992 had created an artificial scarcity, and this was pushing permits into the grey areas, which ran into crores, while the state only earned about 4 to 6 lakhs in annual fees. Now, this is expected to change with this move, and the National Restaurant Association, or the NRAI, of which the Bengaluru chapter had welcomed this decision because this was an ask from them, and they pointed out that the industry has long been asking for more licenses to be coming into the market, and that this will bring down the cost of licenses for the industry and helping them pass some of those costs on to consumers as well. Now, I spoke to Nakul Rajaram, who is the secretary of the Bangalore chapter of the NRAI, on its reaction to the move. Listen in.
With more supply of licenses coming into the market, we will see a drop in the net rent per license, which would be highly beneficial to restaurant and bar owners. It's highly deregularized, Shilpa, so the rental depends on which part of town you're in. But with more licenses coming in, we could see a drop of anywhere from 10 to 30%, depending on how many licenses are being issued.
Well, that's Karnataka's new liquor license auction policy. Now, the Department of Telecom holding the latest round of stakeholder advisory talks with industry leaders today. Top executives from Jio, Bharti Airtel, Vodafone Idea attending the meeting. Ashmit is here with more details. Ashmit, take us through what was the agenda of this meeting.
Well, a high-level meeting being called by the Telecom Minister, Jyotiraditya Scindia. The Stakeholder Advisory Committee in attendance were leaders from the telecom industry, the likes of Akash Ambani, the chairman of Jio. We also had Abhijit, as far as Vodafone CEO is concerned. We also had senior leadership from Bharti Airtel, Nitin Bansal from Ericsson, from Cisco. The main thrust of the conversations we're given to understand was about the upcoming India Mobile Congress. It's around the corner. October 8th is when it begins. It is likely to be inaugurated by the Prime Minister himself. So a large thrust of the conversation about the IMC, about the announcements that are likely, about the investments that these companies are likely to make going forward. So a high-level meeting being called. These meetings, for the benefit of our viewers, are in a matter of speaking routine in nature. They're called in regular intervals. This time again, it comes not only on the cusp of, however, the IMC, which is around the corner, but it also comes less than 24 hours before the Supreme Court is scheduled to hear the AGR petition. Mind you, Vodafone Idea had filed a petition. This was taken up in the last week, and interestingly, the DoT for the very first time came out in support of granting relief to Vodafone Idea, whereby they had said that, look, the facts of on the ground have changed, that we now have skin in the game. The government now enjoys a 49% equity stake in the company, and therefore this is an issue that merits the indulgence, or those were the words used, the indulgence of the the court. The court needs to indulge the government, needs to indulge the Vodafone idea to come out with some form of solution. So high-level talks being done. Of course, the next cue to watch for will be the hearing in the apex court, which is just a few hours away from now. Tomorrow morning is when the Supreme Court will be taking up Vodafone Idea's petition for relief.
Well, that is going to be an important one to watch. Thanks very much, Ashmit, for joining us. The 0.5 percentage point hit to India's GDP because of the US tariffs will be balanced out by the push to consumption from GST and rate cuts. That's the word in from PD Singh, the recently appointed CEO of Standard Chartered India, who spoke with Lata. When asked if he would be interested in acquiring a stake in an Indian bank like Sumitomo has done, PD Singh said that his bank prefers organic growth.
Foreign banks do play a very, very important role in building India. As you rightly said, foreign banks bring in foreign investment into the country. We do, in fact, the Standard Chartered has done more than 30 roadshows, met more than 300 MNCs. The Make in India story is also something that foreign banks have helped grow a lot. When MNCs come into the country, they require a lot of local expertise, financing, understanding of the local regulation as well. So again, play an extremely important part in nation building. We've been here for 170 years and will be here for many, many years more to come.
No, but in my question is, will you take over?
So there is an option always available for a foreign bank to consider expansion by different routes. As of now, I think we are looking at the organic expansion route. In terms of subsidization, which is the other question you asked, again, that is an option available. At this stage, we don't see much benefit of that, but it is an option available that can be used at any point of time.
Okay. Other big thing is, the huge amount of geopolitical issues, the H-1B, and the fear that the Hire Act may also come. How you're a very big banker for GCCs. Have you seen any impact?
Yeah, I think it's too early to say. As the headlines change every morning, we are bracing to see what the different solutions to this could be, but as of today, it's very hard to check on the impact. The GCCs are looking at various scenarios, but I do think again it is an evolving situation and which we hope will be resolved soon.
Well, that's Standard Chartered's PD Singh there. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a minute.